All right, good day, ladies and gentlemen. I haven't uploaded in a while. I've been busy with school and exams and all that good stuff. But yeah, now I can have time to make videos, and so I decided to share a bit of, well, give an update on my FTMO challenge journey, and share a little bit of my trading strategy because I don't think I've ever done that properly on the channel. And if anyone wants to learn, I think this could be a good way to showcase my strategy. Anyway, let's get into the first part of the video, which is my the update. So this right here is the first challenge I did in September, right? So that's not it. This ongoing challenge is the one I'm doing. So let's get into that. Okay, so I started the challenge on January 30th, and currently this is where I'm at. I haven't traded in a while. I have like $6 of profit, and I decided to pause the challenge and wait for the free repeat. The reason is this is the last week. Currently is the 23rd of February. I finished the challenge on the 28th. I had 3 weeks to, at least make 5%, and then I could encourage myself to say, oh, I'm halfway there, so I gotta go. But being $6 up when I had exams last week, and knowing that after last week, this is the final week, I just thought perhaps it's good to roll back and go back and back test, trade my small personal account, and yeah, just start the challenge some other time. So I decided to pause the challenge, but these are the results. The daily summary, I think, gives a bit clarity. So the first day I made 1.5%. Then I placed small lots on all these other days. I wasn't really active because, well, surprisingly, I learned a lot about the current strategy I'm using in this week, right? It was NFP, and I spent more time back testing and studying the market, so it gave a lot more clarity. I took a loss on February 6th when I upgraded to 1%, and then all of these are like small trades that I took. This was a break even trade, this was a break even trade, and this was another loss. So in the end, it wasn't a very smooth ride. I definitely took some losses. These stats are skewed, but everything is right here. And yeah, now that I'm $6 up, I just decided, hey, I'm just going to give it a break and just start over. So because the challenge ends on the 28th of February, I think the 28th, I'm not exactly sure, right? But that week is NFP week, so I'm going to wait after the 28th into the week after next week. And then I'll finally start the challenge again and see how it goes. Okay, guys, so now I'm going to share the strategy that I use, and I'll try to keep it simple. So even if you don't trade using ICT concepts, it can be quite comprehensive. I'm going to go straight to the point. So first, I'll share this that I found. I was just scrolling back because I wanted examples to showcase how my strategy works, and you know, I wanted to go back to see other examples in euro dollar. I took a winning trade on euro dollar today, and today is currently the 23rd of February. So this example is from the 17th of February. Basically, I look for a narrative, which is a reason for price to be headed to a specific price level. So in this example, and with the benefit of hindsight, of course, I can see this. We had an accumulation here, like a consolidation, right? We worked through the consolidation. This is the London kill zone. So this time here is New York time, by the way. So I'm trading using price and time. Price is telling me I'm using information right on the price chart, using all the tools I learned from my CT, and looking for signatures in price at specific times to tell me where price is headed to. Right, so basically that's it. Price came down and took out these lows, right, in the original consolidation. And then all this while I have no clarity. I don't know exactly what the market is trying to do, right? But then this happens. So right now the time is 8:30, as you can see, and 8:30 is the time I start looking for trade setups. So at 8:30, this is what we get. A big candle, okay, and the candle just keeps expanding higher. So currently it's 9 o'clock, and I'm looking, where am I looking? PDRAs. So we call levels where we go in to look for setups PDRAs, right? I'm using the 15-minute time frame still for narrative. without going too deep into this, the first thing I can see is this failed fair value gap. So this was a bearish fair value gap, but we slid right through it and it failed. And inside there, we see a smaller fair value gap, which is a class by classification a BISI, a buy side imbalance, sell side inefficiency. So this is a SIBI. Just think of it as a bearish fair value gap, right? And this is a bullish fair value gap. This failed, and now we have another smaller fair value gap in there. So I'm watching and seeing how price behaves when it gets in here, right? And as you can see, we get in right there. So I go to the 1 minute time frame to look for a market structure shift. So I find the most recent high, and this is it right here. I mean, it went a bit too far on the 1 minute time frame, but this is how I'd look at it in real time. So price gets in there, and I'm waiting for market structure shift, which by this time is a break of this high. We don't break that high, we form another high. So I'm waiting for this high to get broken, and we break it right here. But I want a market structure shift with displacement. I want the candle to be big and leave a fair value gap. So still nothing. Currently the high I'm looking is here, right? We get a big candle. Okay, so now I'm looking here, and this candle left this small fair value gap here. So I note that. If I'm taking a buy, where am I looking to get out? The first drawn liquidity is this high here, right? For me that's enough, because I normally target only a 3 RR. But price leaving this fair value gap is all I need to know to engage in my buy trade. So now I have the draw on liquidity, which is how I'm expecting the market to go into after I take this buy. My stop is right below this black candle. So the fair value gap is a 3 candle pattern. 1, 2, 3. I put my stop below the third candle right down here, right? And I put my entry above the fair value gap. So when price comes in the fair value gap, it hits it before going up, if I'm right. So we get this. Price fills the order right there, hits the fair value gap. And let's see if it went all the way up there like I wanted. I mean, I only targeted 3 hours, so that's a pretty simple target to get to. And as you can see, price just expanded towards the buy side liquidity up here. This thing doesn't want to be named, does it? I don't have any. Alright, let me just write BSLQ to represent buy side liquidity. So towards the buy side liquidity, and as you can see, that would give us a 5 RR. But I don't even stay for 5 RR. I get my 3 RR and I'm out, right? So okay, so now I'm going to share the sell trade that I took today. This was an actual winning trade. I'm going to put it up on the screen that I took. So the other one was like some random example that I found, but this I actually took. So I came in the market again. I had no clarity, and this is what I love about the things I learned from ICT. It gives you an opportunity. Like, that's basically the basis of every strategy you have, right? A good strategy teaches you when to engage and when not to engage. And because ICT concepts employ waiting for specific signatures in price at specific times, if you can find these things correctly and keep your psychology in check so you don't go in looking for narrative every time, it can be very, very protective. You save yourself a lot of pain from what I've seen. I mean, every strategy works depending on who's using it, but this is what works for me, right? So I came into the market, I think, around this time. That's not what I need. Yeah, I came into the market somewhere here even. I was looking at the market the entire day. I had no clarity. I didn't know exactly what we were going to do. Now I saw price took out these highs with this move and then sold down, but currently this is 6:45 and I want to come in at 8:30, right? So let's go to 8:30. Okay, so this is what we have at 7:45. Still not there yet. 8:15 and 8:30. At 8:30 we have this big bearish candle. Now this big bearish candle takes out a couple of lows. So I'm still looking, and I'm waiting for the 15-minute time frame to tell me what exactly it's going to do. You see, price is fractal, so the same fair value gap pattern that I look for on the 1-minute chart, I look for on the 15-minute chart. There's a lot of other tools you can use, like order blocks, breaker blocks, etc. There's a lot of tools you can use, but I prefer to use them all in confluence with the fair value gap. So this is what we have at 9, still nothing, right? And so I see this big candle and I'm thinking, okay, if we break this low, then I could understand that price wants to go higher. Why? Because these two down close candles with this fair value gap, that is a reason for price to go higher. Okay, and if this PDRA fails, then I'm expecting to see lower prices being delivered to sell side liquidity residing below this low, right? So let's see what happened. Okay, big bullish candle. Is price telling me it wants to go higher? Well, I want to see something happen on the other side, and I'm still waiting. So being patient is of great value, guys. I mean, no matter what strategy you trade, being patient is of great value. So currently, I see this. If you trade IC2 concepts, you can pause the video like he always recommends to look for exactly where I built the narrative. Basically, it's right in here. This small fair value gap in here, that's where I was looking. So now I'm waiting for price to come fill that in, and it doesn't have to close it completely, it just has to come in there. And once it does, okay, that's, as you can see, price came in there. That's the 15-minute candle. So I don't want it to, you know, skip ahead on the 1-minute chart. I want to show exactly how things evolved when I was looking at it. So in the 1-minute chart, this is what it looks like. Waiting. Okay, price gets in there right there. Now I'm waiting for market structure shift, which would be at the break of this low. But then we form another low down here. Now I like this low even better because it came into this fair value gap, which makes it qualify as an intermediate term low, right? That's why we call these lows. If a low gets in a fair value gap, it's called an intermediate term low. All right, so I'm waiting for that low to get broken, and we break it right here. All right, so when I took this trade, initially I was looking up here, right? And I'm expecting to see price take out sell side. Like this line is where the sell side liquidity is. Let me actually put it down so it's clear. That's where sell side liquidity is. But as you can see, now we've left two fair value gaps. ICT always recommends to go for the low hanging fruit. This first fair value gap is easy to get into than this one. Normally I'd wait for this fair value gap, but I didn't want to miss out. So today, just as an exception, I put my stop above here. So the 3 candle pattern in this case becomes a 4 candle pattern, right? My stop still remains here because I'm covering this high. So if price indeed wants to come here, I'm still safe. And also I'd like to point out that that's one thing to look for when you're finding a strategy. There has to be a logical reason why you're placing your stop at a place. You see, if you're placing your stop loss 30 pips from your entry consistently, it's, you know, with a lot of discipline, it's possible to do. But if you understand that if price breaks above this high, my idea is wrong, it's a lot easier to get out of a trade because you're wrong. I mean, sometimes you're going to fail. Sometimes your psychology is going to be bad, and you know you might hold a trade longer than you have to, but the logic is there that price shouldn't break above this high, and that is why you have your stop above there. You see, so like I was saying, this is the entry I chose. I'll fill it in somewhere here, by the way, but this is another place I anticipated price to come to. If you trade here, you have a good chance of not missing out. If you expect price to come back here, you have a high chance of missing out, but you get a better risk reward ratio, right? So I think I closed the trade at around a 2.5 RR. Yeah, I think so. 2.5, right? And this is what happened. So I was waiting. I waited for quite a while, and price hit it slightly in here, right? So now I'm expecting an expansion lower, but then price just keeps consolidating like that, and then comes in there to actually fill my order somewhere here. So this is where I clicked sell, right up here. But then as you can see, price came again into the second fair value gap, and I'm just watching and waiting. Once your order is filled, your stop is in place, you're just waiting and watching. And this is what happened. Came in there a couple of times, kept consolidating. I don't look at the screen the entire time. I like reading the tape, which is something we do, where you try to find the logic in the price delivery. It's very fun to do, and it keeps your mind off of the money. So But today I didn't want to do it because I was studying while this trade was running. So, and this happened, right? They took out the sell side liquidity, and as you'd expect, price kind of like stalled in there a little bit, but eventually price got delivered down here. So this was a 2.5 RR, but if I had traded up in the original fair value gap, that would be like a 4.2. I mean, it did go further because I think 12, you see currently it's 12. 12 is the New York launch hour. So if I was so when I was in this trade, I was thinking, okay, I should close before 12. So you see how ICT employs both price and time. It makes it a lot easier to find your bearings when you're trading. The information may seem a bit overwhelming when you start, but with enough practice and back testing, it's clear, and it's a very fun way to trade. I'm not gonna lie. So this is my strategy. This is how I go into look for setups. I took a couple of losses today, and I've analyzed them, and that's one good thing, right? That's why I love trading my CT concepts, because when you're wrong, sometimes you can find the logic on the other side, and it can all be a learning experience. So I put all of these in my journal, which is something I'm going to show in another video. But yeah, basically this is how I trade, and these are two examples of ICT concepts using a narrative on the 15-minute time frame and entry on the 1-minute time frame. So yeah, thanks for watching.